What's up guys, welcome to my channel. If you haven't already, hit that subscribe button so you can stay up to date with all my videos. I post videos about crypto, stocks, and day trading futures. And on this channel I share what I've learned over the last 5 years so that I can help you guys learn and hopefully become consistently profitable in a shorter amount of time than what it took me. So in today's video I'm going to be talking about what I think could possibly be the #1 mistake that most people make when it comes to day trading. So let's go ahead and hop into my charts. Okay, so right here, this is Ninja Trader, and this is the NASDAQ. This is the chart for the micro contracts, MNQ. And as you can see here, I have the 4-hour chart. I have the 15-minute chart. I have the 5-minute chart, and I have the 2-minute chart. The 2-minute chart is what I trade. That's where I find my entries and exits. I use the 4-hour chart, the 15 and the 5 to figure out which direction I need to be trading in to see which direction the momentum is going in. So the problem I think most people have when it comes to day trading is trading at the wrong times. And what I mean by that is trying to trade when price is not in a clear direction with clear momentum. And today there's not much going on in the market. It's choppy and sideways. So this is a perfect example of what I'm talking about. So if I zoom in right here on this 4-hour chart, you can see that we had some sideways action up here, and then we came down a little bit, and now we're in this range where I have this bright yellow box. So that's our current range on the 4-hour chart. And as you can see, this candle that we're currently on and the previous candle both have pretty big wicks on the top and bottom, small bodies. As of right now, this one's looking like it could end up being a doji or just a small bodied indecisive candle. So there's no clear momentum in either direction on that chart. And that's our main chart. Okay, so now we go over here to the 15-minute. Same thing. We've been going sideways pretty much since back here, and this is our current range. That's the high and the low of this range. Lots of wicks at the top and some wicks at the bottom, and no really bullish or really bearish candles, just all indecisiveness. So this is just what I call chop, and it's just range bound. And then you go over to the 5-minute chart, same thing. It's just choppy. It's not really making any progress to the upside or downside. So if you're a momentum trader or trend trader, then there's not really much you can do with this. The only way you can trade this kind of market is if you are just an extremely good scalper. And sometimes I do scalp, but I'm getting to where I'm doing it less and less because for me, I'm just better with the trading the momentum, trading the trend. That's just what works for me. You wait for the setups. Once it's there, you have a really high probability of your trade playing out in your favor. So this green box I have here, this is the 15-minute opening range. So when we first opened today, we reached this high. This was where we opened. We came up to that high, and then we stayed in that range for a little bit. We broke down, we broke above it, broke back down. Now we're back in it. So this is a perfect example of just a range day. So like I said, if you're a really good scalper, you could probably get a trade right here, get a scalp back to the downside. You could get a trade here, scalp back to the upside. Maybe something in here. There might be 3 or 4 trades in there if you're just an excellent scalper, which I do okay scalping, but I'm not that good to where I would feel confident trying to trade stuff like this on a regular basis. So if you try to force trades in here when there's no clear direction, except maybe right here, there's a little bit of a trend here temporarily. But at that same time, when you go up to the 5-minute and you see right here, there was lots of wicks You know, that's kind of a dangerous place to be trying to trade when the 15-minute chart doesn't look very good. So then you want to go to when the 5-minute chart doesn't look that good right here. And then when the 15-minute chart doesn't look very good either, you know, you go back to this same point here and it was just wicks. So when you see these big wicks to the bottom and top, and the bodies of these candles are small, and there's a bunch of those candles all in a row just going sideways, you know that if you're taking a long or short, your win rate's going to be very, very low. And like I said, unless you're doing some specialty scalping type trading. And then you look at the 4-hour time frame, and the last two candles are pretty much doji candles. So there's no clear direction. You want to see direction across all time frames and then take your trade. That's when you have a 70%, 80%, maybe even 90% chance of the trade playing out in your favor. Like, for example, you go back here and you take out this little section right here where we saw clear momentum to the upside right there, and then you go over to the same spot on this chart right here. You know, there's a lot of potential in there because you see big bullish candles on the 15-minute time frame, just like right here. So you know that when you have big bullish candles across the 4-hour time frame, the 15-minute time frame, you know that the 5-minute time frame is also going to look good, and then the 2-minute time frame is going to also look good. So you know that there's a really high chance of continuation to the upside when there's that much momentum. That's big money players putting tons of money on the line, pushing that price higher. So that price is most likely not going to just all of a sudden drop off. It's going to take some time. It's going to keep pushing higher until the momentum runs out. And by that point, you know, you can start seeing the market go sideways. Like up here, this is when it kind of starts getting sideways, momentum starts running out. Just like right here on the 4-hour time frame, you see the momentum kind of dying down. So that might be a good place to take some profits. And then we drop and go sideways, then we have a huge move again. And then same thing here, we see this huge move. You know, this candle here is all of this price action right here. So there's a nice trade there. You could probably catch that downside there if you want to trade counter trend. And you can catch the rest of this all the way up until the market starts going sideways again. So what I do to kind of help guide myself through this kind of market structure and price action when it's all choppy, I draw these yellow boxes. If I see that the market's going sideways on any time frame, you know, a lot of times it may be just choppy on one time frame, but it's fine on the other two. And sometimes you can still trade that. But as soon as I see that we're getting stuck in a range, I put this yellow box on there. And then this one did the same thing, so I put the yellow box on there. And it's over here also, so I just put the yellow box. And then I have one ready for here, so you know, even if we're just stuck in a small range on the 2-minute, something like here, or I could even go here. But most of the time, if those top three are in a range, then I don't really need to do anything at all on the 2-minute, except sit and wait. And then once this 5-minute chart starts breaking out of that range, I look at the 15-minute chart to see if it's going to start breaking out of that range. If it looks like it's getting a really strong candle breaking out of this or dropping down out of this range, then I consider taking trades on the 2-minute, because I already have the 15-minute and the 5-minute, you know, building momentum in my favor. And if that momentum continues, then you will see a nice candle on the 4-hour. So by then I may have already taken 1 or 2 trades, and then if we see a really strong candle on the 4 hour and market structure still looks good on the 15, the 5, then I can find a place like a pullback or a moving average or a key level. I can find some area to re-enter and then try to catch another trade on that same trend. So this is what I do to keep myself from blowing accounts and taking unnecessary losses. I just call it my yellow box method, because if that yellow box is there, that pretty much tells me that's a no trade zone for me. So I've just decided for me that it's better for me to just sit here. If I take a trade because price looks like it's going to break out of this range and that trade fails, I take a loss, I sit back and wait. And at that point, I don't take trades. I just wait for price to clearly have momentum and to be breaking out of these ranges. So I hope you found this video useful. I trade futures pretty much every day that the market's open, and I've been doing so for a while. So I've learned a lot. A lot of that I learned the hard way. So I want to share that stuff with my viewers, and hopefully it'll help you out with your day trading. So if you have any questions, just leave me a comment below. And like I said, if you haven't already, subscribe to this channel, because I'm going to be posting good videos with crypto for the rest of this crypto bull run. And I'll be posting, to explain when I'm taking profits, what levels I'm taking profits at, and then how I'm going to prepare to capitalize and make huge gains on the bear market also when the time comes for that. So, subscribe to the channel. Thanks for watching. And until next time, peace out.